Big Boss Ben.
And we are
the Lone Guys Podcast.
coming to you from the Campo Media Group studio, brought to you by NBI Financial Group, LLC, the premier mortgage broker of the Carolinas and soon to be Georgia, Florida, Texas, Colorado, Virginia, and Tennessee. Benny, what's up? Before we get started, let's do this. Go to our page on YouTube, NBI Financial Group, LLC. Bang that red subscribe button. Turn on the notifications. You want to know why they need to turn on those?
Why do they need to do that?
Because we're giving away $1,000 in either cash or Bitcoin, your choice. All you have to do is watch our videos and then comment under the video. Something about the video. Don't just say great video. Comment your thoughts and leave your Instagram handle. Be subscribed. Turn the notifications on, and you will be entered into a $1,000 drawing. We are giving it away on September 1st. So make sure you bang the red subscribe button, turn on the notifications, comment on our videos. Each legitimate comment, not just, hey, great video. Each legitimate comment will get you a new entry into a $1,000 drawing that comes out on September 1st. And with the recession that is in place, you're going to need that $1,000 or else you'll go broke. So go to the rest of our social media. We're on all of them, including TikTok, Instagram, all of them. NBI Financial Group, LLC. Go and find us. Ben, what is up, dude? I know you have a great episode planned for us.
We do.
Hit me.
It's going to be an eventful one. So, first off, I want to start with a story that I have from my home. So my wife came home the other day, and she brought up to me and asked me, "Hey, is it true that if you have a higher credit score, is now going to cost you more to buy a home?"
Your wife's paying attention to the news?
Well, apparently they've been talking about it around her office. But you know what that told me? That told me two things. First off, she doesn't watch your podcast. So I'll have to talk to her about that.
No, you might not want her to.
Second off, it shows me that what we've been talking about with the loan level pricing adjustments, the LLPAs, are catching on. It's become a hot topic around there. And if you've been watching the news, if you look at YouTube on anything like market related or real estate related, you are seeing that go out there, and it's become pretty viral lately. It's become a hot discussion topic about the fact that it's going to cost you more, that a better interest rate will cost you more now for a higher credit score client than compared to ones with lower. Now there's misconceptions. I probably didn't word that the best.
No.
Because
I'm okay that you did that.
Right.
Because here's why. I just had this conversation with somebody else and they asked me the same question. Hey, I heard that they're rewarding. So you finish your thought, and I want to get into this story. Finish your thought, but I think you worded it perfectly because that's how people are hearing it.
Right. And I did want to address that too, because a lot of people are hearing it that way, but it's more of comparison. So what they are doing is they are now offering benefits for lower credit score clients, for basically higher risk clients, ones who, at least on paper, are not as qualified. And what they're doing, they're giving them a benefit, but that money has to come from somewhere. So what they're doing is they're adding additional costs to higher credit score clients, to clients putting more down on a down payment. What they're doing is, you're not going to get a better deal as a lower credit score, but what it's basically doing is evening it out.
So I call it less of a negative hit.
Yeah.
You're still getting somewhat of a negative hit.
You are.
And then the good credit score, good down payment people who are considered less risk in mortgage are getting less of a good hit.
Right.
So you want to hear my story on this?
Let's hear it.
And why I think you worded it perfectly. I had a call today when I was on the way to Best Buy to buy some stuff for the office for this podcast for our friend Donovan. And it was a client. And the client called me and said, "Hey, so-and-so realtor gave me your contact information, said that you guys are the premier mortgage lender in the Carolinas." I said, "You're absolutely right. We are the premier mortgage lender in the Carolinas. What can I do for you?" She's like, "All right, well," and essentially came down to, she's retired. She's trying to move into a home that she doesn't own a home right now. She's renting, and she's at retirement age, and she's, good to go. She was a former nurse for 35, 40 years, she said. Her retirement income between the disability, because she got hurt at work, and this permanent lifetime disability, and her retirement is something like $8,000 or $9,000 a month. She's making $8,000 or $9,000 a month. Now, she lives in Massachusetts, so in Massachusetts, price of living is super high.
Yeah.
She's moving here to Carolinas. Long story short, she said, so I started asking her, what's your credit like? It's terrible. When I was doing all those hours for, the COVID, I forgot to pay some of my bills, credit card bills. But it's good enough to get, and I said, okay, what's your savings look like? Zero savings. Okay. Maybe we do a down payment assistance program, first time home buyer, that type of thing. What does, and then I started asking more about credit. But anyways, what she asked me, she's like, well, I heard that the Biden administration is giving low credit score, low down payment people an advantage, a credit to go ahead and buy homes. And I was like, well, first off, it's not the Biden administration doing this.
No,
it's Fannie, Freddie, and HUD.
FHFA.
FHFA, yeah. And second off, it's not a credit. You're still going to have a worse interest rate than somebody who has a higher credit score. You're still going to probably have a worse interest rate than somebody who has more down payment. What they're doing is they're hitting you less for those negative aspects or those risks.
Correct.
But everybody's hearing it as, oh, it's a credit. Oh, they're taking money from this person. They're not. They're just not giving you as much of advantage if you have a higher credit score, more down payment.
Right.
And they're not hitting the other person as much on those loan level pricing adjustments. But people aren't hearing that. The news isn't saying that. Like if you turn on Fox News, CNN, MSNBC, the conglomerates, they aren't telling you the actual factual information.
Right.
Which is very interesting. And I got asked about this. I was invited on a podcast yesterday, and they wanted to talk about down payment assistance, first-time homebuyers, things of that nature. And they asked about this, and there's just such a massive misconception. But the other question that was asked of me was, what do you think this is going to do to the market? I said, well, you're putting more risk into the market. We'll find out in 3 to 5 years. And when you put more risk into the market, risky things happen.
Right.
So
that is exactly my thoughts on it as well. And I thought a good way to explain it. So basically is if you are an 800 credit score client putting a lot down, it would have previously cost you 50 cents basically for your interest rate. Now, after the change, it's going to cost you 75 cents.
And it's not technically 50 cents.
No, I mean,
that's just roundabout numbers.
This is just even numbers to kind of make it easier to understand.
We have to make sure we explain it because of our folks on TikTok aren't very smart. So that clip would get cut up and then all the TikTok people would be like, but he said 50 cents.
This is making it easier to understand with easier numbers, with myself included. It makes it easier to understand. If you're a lower credit score client, say, for example, it cost you previously $1.50 for that interest rate. Now it's going to cost you $1.25. So it's just skewing where that 50 cents is going. It's moving it from a benefit for higher credit, more qualified clients to less qualified clients, at least qualified on paper.
Right.
So, but I mean, you bring up a great point as well in terms of what is this going to do for the market down the road? Like, how is this going to work on the secondary market? Because yeah, it makes sense on paper, and we all would love to incentivize and help first-time home buyers. I mean, that's something we are both passionate, and why we got into this to begin with is because we want to educate and put them in better positions.
Right.
But you also have to look at the secondary market, because that's not sitting here saying, oh, it's going to incentivize this and that. It's looking at it from a risk-based perspective of who is going to more likely make their payments.
Well, and here's the other piece.
Yeah.
We can help as many people as we want to help,
Yes.
right? But can you help people at the detriment to everybody else?
See, no.
So,
In my opinion.
because what is happening now is you're incentivizing risk into the market, and you're incentivizing people who don't have a great history of paying their bills. You're incentivizing people who don't have a great history of saving their money.
Right.
Oh, but Nick, we don't make enough money. You do. You just don't have a budget. And if you want to bet on that, I'll win that bet 3 out of 5 times. That's a winning percentage for gamblers out there. All my gamblers know that, right? So you're incentivizing people who have not been financially responsible. And I'm talking to myself in my 20s. I wasn't financially responsible. I bought my first house and I said, you know what? I own a house. I don't need anything else. I ran up a bunch of credit cards, didn't pay my bills. My credit score took a hit. It's now above 700 after years and years and years of hard work to get it there and to do the right things and to pay off the charge-offs and to pay off all that. We make mistakes, folks. I'm not saying you're a bad person. What I'm saying to you is we cannot incentivize people who have a history of not doing the right things, because guess what? History does repeat itself if there's no consequence to it. Right. So you have to learn from your mistakes. So what I am worried about is we're incentivizing people who have a history. So we're putting risk into the market. It reminds me of subprime lending to an extent, maybe not as bad, but there was a history there where we could just stated income. We could do this, we could do that. But now it's FHFA mandated. And now you and I, what happens to you and I in our home prices if a bunch of people who are incentivized don't pay their bills? Then what happens to us when they don't pay their bills and their homes get foreclosed on and more homes come on the market than people want to buy? It drives our home prices down.
Right.
So we can't incentivize and we can't help people at the detriment to the
People
homeowner
who've done the right things.
Exactly. Now, do I say, hey, let's not help these people? No, I don't say that. I don't say that at all. I think we should help everybody.
Right.
That wants help.
So, and I guess part of my frustration with all this and my personal opinion on it all is when we look at it, because there's still options available. And I'm looking specifically at FHA right now. FHA financing, there's not many adjustments for credit score. Like, it is built there. The interest rate is there for lower credit score.
And they lowered MI
for that
too.
They've lowered mortgage insurance on that, but that's the other piece to it.
That's the question.
But FHA loans are built like that for a reason. And a lot of people think, about the monthly mortgage insurance.
Right.
And it did. It went down to now it's dropped like 30 basis points.
So let me ask you a question.
0.003% of the loan amount, like, annually.
Can I ask you a question on that?
Yes.
And this was the question that I brought up to the group of realtors who had their podcast who invited me on yesterday. They were like, what's this do to the market? I said, no one knows. It's a guessing game. We'll figure it out. I mean, only time's going to tell. 3 to 5 years, we'll know what
Right.
incentivizing people who have lower credit scores, less down payment will do. Hopefully nothing bad. We'll find out in 3 to 5 years. However, now you've lowered MI as well, and a lot of them are going to be FHA clients, right? So you've lowered MI to the point where if things go bad on these FHA loans, is there going to be enough there to save what's gone bad? Because MI was set up to insure companies so we don't have to do these big bailouts again.
Right. But it did not change with the mortgage insurance. The monthly amount changed, but FHA also collects upfront.
But is there going to be enough if you lower the MI? So if enough stuff goes wrong, there won't be enough MI there because you've lowered the MI.
You've lowered the monthly, but there's still the upfront portion that's being paid. So that's still 1.75% of the loan amount. So when you're looking at it, that's still being collected. So the monthly amount is a smaller portion compared to the overall.
I understand what you're saying, but the reason you collect mortgage insurance
Yes.
is so that there's a big pot of money
Right.
in case these mortgages all go
You
poof. It's not 100% of all the mortgages given.
Correct. This is FHA, and VA has funding fee. It's government backed.
So hear what I'm saying to you. You've lowered the monthly amount, so
Mhm.
there's going to be less money in that pot if things go haywire. So they had to have, say, 10% of all the mortgages allocated to that pot of money.
Yes.
Do you get what I'm saying?
I do.
So if you have enough things go wrong, because you lowered the monthly, there's going to be less money in that pot.
Yes.
So you're incentivizing riskier business and you're taking less monthly mortgage insurance to add to this pot of money in case things go haywire. So if enough things go haywire and there's less money in this pot, there's a higher chance that something bad will happen.
There is, but and this kind of gets into more conspiracy, like why are they doing the LLPAs? Is it really just purely to give first-time home buyers, or is it for other reasons? Because when you take these into account, like, look what's going to happen to the client. Like, FHA is going to be more advantageous at this point because you're getting less
I
benefits.
understand that.
More higher qualified clients are going to go FHA because of that. So you're going to have less overall default on that. And this is all theoretical. Like you said, before, we'll see everything in 3 to 5 years. Like, we don't really know. It's all just speculation. But you're looking at that, and you're also looking at it as how many people are actually going to take advantage of that with lower credit score for conventional loans, that these loan level pricing adjustments that we're talking about goes towards. Because you also, I mean, if you're not in the mortgage industry, there's something called AUS findings, automated underwriting system. What it does, it takes all the it basically takes the client's profile, puts it all in an algorithm, and spits it out. It's all based off of numbers on paper. But something that, I mean, any sort of underwriter knows is that for a conventional loan, it's really hard to get those approvals with a lower credit score. Meaning how many of those are actually going to take advantage?
Get approved eligible.
So where's that money going? That's because it's not going to balance out evenly. I just, with the way it is,
so I don't know where would the money go.
It's all going to FHA, but that's also, is that going to offset the balance for the reduced mortgage insurance for FHA? So is it all going to kind of end up balancing out?
I don't know. I think there's a lot of theory that sounds great on paper.
Right.
That doesn't play out well for us, especially when you're trying to control the markets. And when I say us, I'm not talking about the mortgage people, because guess what? We're like cockroaches. We always survive.
Yes.
I'm talking about the American people, the American working class people, the people who make this country run, the people that I started a business to try to help. I'm talking about, it hurts them if things go haywire.
Yeah,
it does. And it's just, I just wish they would stop manipulating the markets.
Right.
Because this is a market manipulation, is it not?
I mean, it purely is.
This is a market manipulation. Hiking the overnight bank rate, the Fed funds rate, I should say, is a market manipulation. Bailing out not Lehman Brothers, they let them die, but bailing out all the big banks in 2008, bailing out Silicon Valley Bank and making sure so-and-so is taken care of and picking and choosing winners. That's market manipulation. That's corporatism at its finest. That is big time lobbyists from these big time places are paying a lot of money to our politicians, campaigns, and so on and so forth. And they're owing favors and they're pushing stuff that is manipulating the markets. If we would just let the markets play out, and we would be in such a better spot.
We would, but I mean, they've already been manipulated to this point. I mean, it's.
So you're saying we have to keep manipulating them?
Or things crash.
Things are going to crash at some point anyways, because we are manipulating them.
Yeah.
So let's rip the Band-Aid off. What's that saying? Hard times create hard men, or good men. What is it? I forget. It's a saying though. Maybe we need some hard times so that we can rebuild our country better after a crash. And that might sound crazy because I'm a mortgage person.
Yep.
But listen, recessions are great for business. Interest rates go down. So I'm kidding. Well, I'm not really kidding, but I don't want bad things to happen for lower interest rates, but that's typically what tends to happen. Sorry, this is bothering me, but yeah, that typically is what happens. The markets have been manipulated to the point where I don't think there's any coming back in this system. And I'm not calling for a system crash. I'm not calling for a reset. I'm not calling for any of that, but they're going to continue for the rest of our lives, probably trying to manipulate the markets to prevent a big crash. They're going to keep hiking debt ceilings and doing things of that nature. They're going to keep printing more money. They're going to keep messing with interest rates. They're going to keep doing all that. And it's going to really, I believe in regulation, but I don't believe in market manipulation. And that's what this is. But it's on a massive government scale.
Right.
Or allowable by the federal government. And until we get smaller government and people who have more of an understanding of what's happening on a day-to-day level, we're in trouble. We're in trouble.
Yeah. I mean, we are. But you know what's not going to get you in trouble?
What?
If you hit that subscribe button, ring that notification bell, click like on this video, and leave a comment. Make sure you comment on the actual content of this video. Leave your thoughts. Don't just say, hey, I was here. Actually leave your thoughts. That way you will be entered into a contest. Make sure you also leave your Instagram handle. That contest is going to be for $1,000 paid either through cryptocurrency or through
Bitcoin or cash
or the yuan, depending on where.
We're not paying in Chinese currency. That stuff's manipulated. What are you talking about, crazy person? It's given away on September 1st.
Yes.
So yeah, we would appreciate it. Bang the red subscribe button. And while we're here, follow notifications. Ben, do me a favor. bend that microphone like this so it's more towards your mouth. There we go.
Okay. All right. So going into another thing that is vastly manipulated by the government. This is something you were not even, I didn't even prep you on. I'm kind of interested.
Louise.
So FHFA announced another thing within the last week. So basically had an update on the new credit rollouts. So what they are doing, essentially, they're rolling out several new credit models that are going to be mass available for lenders to use. It's going to include other things into like utilities, rent payments, things like that. That I mean, I believe are going to be beneficial to people out there who are making payments, but may not have the credit cards or raising the debt needed to actually build a credit score, which is a good thing financially. I mean,
right. So what are they doing now?
They're basically are additional. It's not going to just be Equifax, TransUnion, just not the normal FICO model. They're rolling several new models out.
TransUnion altogether.
Yeah. But what is essentially what I'm excited about this is it's going to create competition, because right now in it, everyone requires the three: Equifax, Experian, TransUnion. It's essentially a monopoly. They can do whatever they want to. They recently, not many people are talking about it. They recently drastically raised their prices.
Drastically.
I mean, it's over $50, like a person,
$54 a person. Now.
It's
and
insane.
That's on the low end. Some other,
it's insane. Like, and you really have no recourse to shop around because you have to use those three. What else they do? And I mean, you just mentioned this. TransUnion in particular, if you have a mortgage pull, they will sell that information. Hey, this person just pulled their credit to other lenders.
And then you get call after call after call after call after call from these, I call them sweatshops of lenders. They're like they're retail mortgage lenders. They pay for what they call trigger leads. TransUnion sells it to make more of a profit after already charging you to track your credit that is required to be tracked. And then you get a million phone calls from salespeople, and they're sweatshops. They're the Movement Mortgages of the world. They're the Reliance First Capitals of the world. I don't know if they're the Movements. I just wanted to take a shot at Movement, but they're the Reliance First Capital of the world. They're the Go Mortgage. They're the Motto Mortgages. Who else? Let's see. They're the Wyndham Capitals. And I'm taking some shots at some big lenders. So if I don't show up tomorrow, I did not commit suicide. I wouldn't. I believe in living, son. But anyway, so what are they doing? They're giving us more options on these credit reports.
Correct. That's the good news, is that they are working on actually rolling out several different options that are going to be utilized.
Great.
Not only is it going to incentivize and give an advantage to home buyers by alternative credit sources like rent, people who are actually making their payments on time.
Who is it going to get reported to?
I mean, there's different companies.
So different companies but they still take into consideration credit card payments, mortgage payments, but you can add rent payments to it.
Correct. It just is alternative on top of it. It includes alternative like utility payments, rent payments, things like that for people who are making payments but may not want to go out there. Oh, I don't want to get
this is good.
Credit card debt. Yeah, I mean which is great. I mean
I love this.
So it's called the FICO 10T and VantageScore 4.0 are a couple examples.
So let me ask you a question.
Yeah.
How quickly until lenders adopt this?
That's the bad news.
Do you know who? What?
So phase one, which is basically they're going to have the models and everything completed, are going to be third quarter of 2024. Their estimated phase two, which is going to be rolling it out to lenders and creditors, is Q4 of 2025. So we're over 2 years out.
Do you think Dave Ramsey's still going to be alive then? I know he's in his 60s, upper 60s. And I say that out of all due respect, because I'm a big Dave Ramsey fan, and Dave Ramsey preaches not taking out credit cards and not doing debt. And I think Donovan asked a question last week on the podcast about whether I thought credit card debt is a good thing. And I said no, because the majority of people are simple enough to utilize it correctly. If people don't have a budget, you should not have a credit card.
Right.
Now, with that being said, this creates a way for us not to have credit cards.
Exactly.
Because you can put your utility on there, your phone bill on there, your gas payment, like you can have car insurance,
like payments that everyone is making that you could do diligently and on time, show the restraint not to take out credit card debt that could put you in a bad situation.
Right.
But you're being negatively impacted that when you're looking to buy a car right now, when you're looking to buy a car, when you're looking to buy a home, because
this allows the Dave Ramsey model to work. Don't take out credit card debt. You can get a mortgage through other non-traditional credit. Like this, So if I'm making a payment on something, why shouldn't it count?
And it's increasing different options, which increases competition, makes everything better.
Well, and then on the other side of it is now people are buying only what they can afford. So they're not having to worry about, say they don't take out the credit card, you're only buying what you can afford and what's in your bank account or what cash you have on you, but you're still making your other bill payments on time. Guess what? There's going to be more money being able to be spent within the economy.
Right.
There's going to be less people getting hit for their credit score and their credit score lowering. It's going to open up home ownership to more people.
Yes, it will.
So I wonder how heavily those utilities and things will be weighed.
I mean, I have no idea. I guess they don't, because they're saying all of that will be released Q3 of 2024.
So quarter 3 of 2024 is about what, a year and a half away?
Yeah.
So that really means Q3 of 2025 at a minimum, because these things never roll out when they're supposed to. I think it's great. I'm excited.
I mean, it's more options. And we said this last week, competition breeds winners. Having options are going to give us people way to figure out and improve things and make it better for everyone.
Right.
I mean, because right now, one of the most frustrating things that I have speaking with our clients is when they're complaining about, hey, why am I getting 100 calls? Because you pull my credit. That is the most frustrating thing, because we have nothing. We understand the frustration.
I mean, it happened to me.
It's annoying.
I pulled my credit. You pulled my credit. You did a mortgage for me.
Yeah.
You pulled my credit, and I had 100 phone calls, and I own this company.
But there's nothing we can do to stop
it. Started recruiting them and asked them if they wanted to come work for us.
Right. If we're going to be able to get you a mortgage, you have to be able to pull that. There's no other way around.
There's no other way around it. We have to see a hard pull as well, because the hard pull gives us the information we need. We cannot give you a truly underwritten pre-approval without having a hard pull on your credit, which we do. Which
the difference, with hard pulls, what's the difference?
I'm going to let Ben speak on that.
So, basically, what it is, there's two different types of it. So, a hard pull actually will pull it; it'll report to your credit. So when you look at it, it's actually going to show us, hey, these pulled your information. Everything's going to be updated within the last 30 days, 100%. There are always creditors will report to other things that may monitor. Sometimes they do, sometimes they don't. They're not actually regulated to do it consistently. It'll pull that data and give you an estimate based off of it, which is called a soft pull. Is not nearly as accurate, but at that point, it is also not reported to the credit bureaus that information was pulled. So
would you say a hard pull goes back further, or are you saying it's just more within a certain time frame?
It's more within a certain time frame, because they legally have to report that's pulled on a hard report.
But what's it shows? Tell them why would you get a soft pull compared to a hard pull? Why do we require a hard pull compared to a soft pull as a mortgage person? That's what he's asking.
Because it pulls way more data from it.
Like what? Give examples. Lates.
Correct. It'll show yes, it'll show specific payments on that.
Remember, people don't understand what we do, right? So talk to, if I was a kindergartner and you were trying to teach me the difference between a soft pull and a hard pull, and what a hard pull shows that a soft pull doesn't, and why we have to get a hard pull.
For example, you have an American Express credit card. They legally have to report it to the credit bureaus, and that will show up on that.
On what? What's that? A hard pull?
A hard credit pull.
But it will not on a soft pull.
It may not. It's just up to them. Yeah.
It's up to who's them?
American Express.
So American Express say, I'm not showing soft pull.
Correct. Or they just forget to, because they are not legally required to. So there's not nearly
they probably don't do it because it's more work.
Correct. So there are information, there's accounts that aren't going to completely show up. You pull it, it may not even show lates that are actually there. So there's a lot of information that may have not been reported. But that is actually going to show up on a hard credit pull when it actually pulls a complete data pull.
Right.
I'm not a tech person. I don't know the ins and outs of why it does that.
We're not asking why. We're just asking what the difference is.
Right. It basically, it's just some information that's not being reported correctly.
So soft pulls are not a thorough pull of your credit. For example, there could be a dispute on there that is not showing up on a soft pull, which makes your credit score look 729. But when in mortgage, you can't have that dispute. In order to get a mortgage, you have to have the dispute removed. It could drop you to a 619.
Right.
So that's why you have to have a hard pull. Also, like he said, that some late payments and stuff might not report. Some cards might not report at all. So there's no way for us to be able to tell whether you're truly qualified from a credit standpoint with a soft pull. We pull the hard pull up front, and just our service is second to none. I call it white glove service. I'm not worried about other people calling you because they aren't going to be able to do what we do. So
like a soft pull is like trusting someone, like trusting your word, but a hard pull would be more so like checking their pocket.
And I trust everybody.
Pretty
but
much.
I verify everything. Trust but verify. I'm like the CIA. Wait, no, we don't trust them. Oh, yes, we do. Sorry, CIA. So what's going on then? What else we got? The credit, I think the updated credit is great. Thank you for explaining hard pull versus soft pull to the American people. Remember, these are working class folk, so they aren't in the financial industry. I know you grew up very privileged.
Oh my God.
You were, what was it, white collar? Us blue collar people need detailed explanation.
I mean, it's just kind of hard because I don't understand. I'm not a tech person, so I don't.
Well, it's not the
understand.
tech. We were looking for it, and you did a good job of what it does show and doesn't.
Right, but it's different because of the tech, and I just don't understand.
Gotcha.
But it's ultimately it's just the amount of information that shows.
So we need to get a nerd on the show to explain it.
Pretty much.
I love nerds.
So
But Candy too. Oh shoot, what do you got for us?
All right, let's transition to, and we got a video that I know Donovan has prepared. I want to play
But
this.
before we do that, bang that red subscribe button, turn on the notifications. But what I really want you to do is to comment. So in order to get you to comment on our YouTube page, we are going to give away $1,000 starting on September 1st. On September 1st, we'll give away $1,000 Bitcoin or cash. All you have to do is bang the red subscribe button, turn on your notifications, comment on our videos, and leave your Instagram handle. Make it a great comment, though. Don't be like, oh, good video. That's not going to get you an entry. And every detailed comment on one of our videos with your Instagram handle, as long as you're subscribed, will get you entered into a drawing for $1,000 of Bitcoin or cash. Everybody loves straight cash. Homie, ask Randy Moss, and especially in a recession. So do that to win the possible $1,000. And listen, go to all of our social media. We're TikTok, Twitter, Instagram, Facebook, LinkedIn. We are MBI Financial Group LLC on all of them, and we will be launching a Rumble. A Rumble is the same thing as YouTube. It's their rival, and it's good to be on all platforms. So we're going to get on that platform as well.
So transitioning to this quote. So, because you mentioned something earlier about a lot of people not having budgets, you know where that comes from?
The Fed.
Well, yeah, but also because the government itself doesn't follow its budget.
Oh, really?
Yeah. So
what's this video?
Let's hear this.
Wait,
this is Janet Yellen.
She's hot.
Who was the previous head of the Fed, like you mentioned, and now the Secretary of Treasury.
I can't wait. That's another T-shirt. Janet Yellen's picture. She's hot.
Yeah, this Campos crush.
Oh yeah. Ooh, man.
So Donovan, play that video. Let's hear what she has to say. So I want to start off by going off on this because
great. Get him, Benny. We might need to get the
What she's doing right here is she is raising fear right now, because what she's saying isn't wrong. Like if the US defaults on it, it will create so many issues out there. I mean, we're looking at it, Social Security, 401ks, military spending. If the US, I mean, not to mention the real estate market. The real estate market and mortgages are backed off the 10-year US Treasury bond. If those lose its weight, what is that going to do to mortgage rates? Like it's going to create so many issues out there for everyday Americans. And I mean, think about it. How many people out there, if they don't get their social check, they're going to be in serious trouble. Like, and we're putting ourselves into here. But the catch, why she is saying it like this, and the key word into that is with no stipulations, because she is sitting here saying, pass it by time, which we're going to have to do. We have to do that, because if not, I mean, if we've already weaponized the dollar, if we go to the point where we're losing credibility in the U.S. credit and U.S. bonds and Social Security and all U.S. based investments, it's going to be devastating to the market. She is 100% right on that. However, you have to look at, why are we in this position? You have to put stipulations in there to, hey, yes, this is a short-term fix, but what is the long-term solution? Let's not just push this off another day. Yesterday 2 days ago, on the 25th of April, the House passed a bill that would increase the debt limit by 1.5 trillion. Essentially what that is doing, buying us some time, approximately probably a year. With that, they did increase and put in stipulations about, hey, we are going to have to reduce spending on these certain things. Now, there's a lot of bipartisan things in there. It's, let's student loans, this and that. At the end of the day, spending just has to stop. Like, saying that there's no stipulations, not taking any accountability, is mind blowing. Like, you are the Secretary of the Treasury. Your job is to keep the budget for the U.S. You are not doing that. You are increasing the credit limits by $1.5 trillion from, 31.4 trillion in debt to now just under 33 trillion. Like, that's not going the wrong direction. That is essentially saying, I am failing at my job and I don't care how to get this fixed long term. I just want to buy another year.
Let it burn. Let it burn, man.
You know,
let it burn. Like, seriously, like, you talk about the pain. There's going to be pain. Let this fucking burn. I am so sick of the lack of responsibility from our government, from Janet Yellen, Jerome Powell, from basically every Fed chair since the late 80s. Let it burn. Because guess what's going to happen? The American people will be okay. The fat cats, they won't be. And guess what? The rest of if we take a hit, let's talk about this, because everyone keeps bringing up the US dollar. I got it brought up to me yesterday. 76% of the world reserve currency. Yes, it'll affect real estate. Yes, it's going to affect the dollar after the dollar was already weaponized by the Biden administration. But let's see how great China, Russia, Brazil, India, Saudi Arabia. Let's see how great the BRICS countries do if the United States just says, fuck it, let it burn. I want to see who's going to survive that, because they can't survive without our consumerism.
Right.
Because they make the products that we purchase and we do all the high tech shit. So let it burn. And to Janet Yellen, what an idiot. We need to suspend the debt limit without any consequence. She's so damn hot, I can't take it. Let it burn. Janet Yellen's an idiot. The Biden administration for putting her in that position's idiots. Jerome Powell's an idiot. They're going to hike the Fed funds rate again. They're all dumb, man. They're either dumb or they're doing this on purpose, because there's going to be masses of transfers of wealth. I say let it burn. Let's take the pain. I feel bad for the Social Security people, but guess what? You should have planned for retirement. That's what we should be teaching. You should have planned for retirement. I do. And I do feel bad for that. But if you're relying on Social Security for your retirement, that's a problem. Because Social Security was not designed to support everybody.
No.
It was designed to support 20% of people who made it to the age of 65. Well, guess what? People are living a lot longer now. We've borrowed. Oh, wait, hold on. The U.S. government borrowed against Social Security and took money from Social Security and wrote a bunch of IOUs, and that isn't paid back yet. Wait, hold on. And then you want to sit here and you want to tell me in this video that she's telling us and she's telling Congress, who just passed the bill with stipulations, saying you can't keep doing this because you're driving our country to become, we're going to be underwater. We're going to be essentially 2008, except as a country, not just as a homeowner, right? Underwater on our debt. because you're driving, they want to drive the debt ceiling to $50 trillion. I say, you know what? Stop sending money to Ukraine. My parents told me my entire life, mind your own business. How is Russia, Ukraine our business? How is it? MYOB, mind your own business. Mind your own business until it affects you. Take care of home first, because I can drive through Chicago and parts of Chicago look like a third damn world country, but we're sending trillions of dollars over there and we want to up our debt ceiling for them. I don't know them, but I know the American people. I know the American people. Drive through parts of Atlanta, drive through parts of any big city, Charlotte, New York, anywhere. Shit, Rock Hill, South Carolina. I was just driving through downtown Rock Hill. It's very nice in downtown. You get outside of downtown, some of those homes look like they had bombs that were dropped on them. That's not right. But you want to take care of the Ukrainians and up our debt ceiling so you can send money overseas to that. You can send money to, what was it, Iran for gender studies. How about this? Let's stop focusing on shit like that and start focusing on how we can take care of the American people. So I say let it burn, because I have faith that the American people, yeah, we'll suffer a little bit, but we made it through the Depression. We made it through the World Wars. We made it through 9/11. We've made it through Pearl Harbor. We've made it through a lot of catastrophic events. And you know what the number one thing that comes out over and over and over and over is we are resilient people here, more resilient than the rest of the world, because there's something in every American, and not enough of them have spoken up, but it's starting to happen to where we're survivors and we're not going to take shit from anybody. And I'm sick of taking shit from the U.S. government. I'm sick of taking shit from Janet Yellen. I'm sick of them manipulating our currencies. I'm sick of them manipulating our interest rates. I'm sick of them saying, hey, we have to continue to borrow, but guess who's going to pay it? Donovan, you're going to pay it. Ben, you're going to pay it. We have to. Why? So we can send it to Ukraine for people we've never even met? Like, granted, I feel bad for them. That's a humanitarian crisis in certain instances across the world, but we have to take care of our home first. It's the same thing on the airplane. You put your oxygen mask on first so you can help other people. I cannot help somebody at the detriment to myself, and that's what we are doing as a country. And she wants to sit here and say there should be zero consequences. Oh my God. Like, keep a budget. Keep a budget. The last time it was balanced was during the Clinton administration. Right. And that's every president, every administration, from Republicans to Democrats. Right. But what they don't want to tell you is they're all on the same team. They're going to pass a budget that's going to increase the shit to 50 trillion, and they're going to run this country into the ground. They're going to keep causing inflation. They're going to keep causing the destruction of the US dollar. And it doesn't matter if it's Joe Biden or the next president. That's what's going to happen. Doesn't matter if Republicans control the House. It doesn't matter if Democrats control the House. It doesn't matter if Republicans control Senate or Democrats control Senate. They are going to keep destroying our country because they don't know what the true Americans want. The true Americans aren't the people who go to Wall Street. They aren't the people sitting in Congress. They aren't up in Washington in their bubbles. The true Americans are sitting in this room. The true Americans are right down the street. The true Americans are going into that job every day, working a 9-to-5 to support their family. And when I hear shit like that, I want to slap that hot woman. I want to slap her, because here's the thing is, and I would never hit a female, but I'm saying that because you don't understand the American struggle. And every single time you raise the debt ceiling, then raise my taxes, you make it harder for me to send my kid to a better school. You make it harder for me to be able to buy a new car for my wife who has a second child. You make it harder for every American to live life in this country. And it's disgusting that they don't see that. It's disgusting that they want to keep pretending that we're stupid. The American people are not stupid, and I see it more and more and more. More people are standing up. More people from every race, nationality, color, creed, neighborhood. If you talk to people, 85% of them are on the same page. We are sick and tired of it. All of us are. We are sick and tired of it. And we want to sit here, and she wants to pretend that she has our best interest in mind. She doesn't have our best interest in mind. How long has she been involved with the Fed? How long has she been involved with the Fed? Years. She was the Fed chair at one point.
For 4 or 5 years.
She was the Fed chair at one point. More than 4 or 5 years. Dude, that was 10 years ago. She's been involved, and she's been in positions to where she had actual control over budgets and what money is printed and so on and so forth. And what did they do? They kept hitting the print button. They kept hitting the print button. They kept hitting it. And here we are. Here we are. And you want to say you want to raise the debt ceiling without just eliminate it with no consequences. The consequence isn't to them, because I'm sure they have other currencies and other investments and paintings that are worth so much money no matter what happens to the American dollar that they'll be okay. I'm sure they have that, but the American people don't have that. They don't. They don't have diversified investments. 3 out of 5 don't even keep a budget because we don't have financial literacy in our schools, because we have the Department of Education, which is another fat cat government organization that doesn't do jack shit to make sure the American people are taken care of. They would rather argue about whether gender studies should be in schools than whether or not kids can read and pass certain curriculums. And if you're from the hood, you're not taken care of at all. At all. So you want to talk about passing budgets and so on and so forth? Let's cut the Department of Education and put somebody in there that actually can teach financial literacy, math, engineering, science. Let's start competing on the world stage from an education standpoint. Then we can talk about the budget. How about this? Let's fix Social Security. You want to talk about Social Security? Let's fix it. Let's incentivize businesses to come back here. Let's incentivize manufacturing jobs. You want to know a good way to fix a low-income neighborhood? Bring jobs there. Guess what? Manufacturing jobs pay $17 and $20 an hour. I know a lot of people that would fix up a lot of neighborhoods. Yeah. Fuck Janet Yellen. Fuck Congress. Fuck Senate. And fuck politics.
So just watch over the next 30 days, watch the markets, because what they are doing right now in Washington, they're going to basically play a game of chicken. Just mention this bill that was passed by the House. So what a bill is, it still has to be approved by the Senate. It has to pass. The president can veto it at any point. It doesn't make it a law. It's, hey, this is a proposal. It's not going to get passed. They're basically going to play a game of chicken. Both sides know we have no choice but to extend the debt limit. They're going to wait until the last possible second to try to use it for their own political gains. Like even this bill, the Republican side, they're not doing it to cut down spending. They're doing it to fight the Democrats' policies because let's try to push our own instead. That's exactly what they're doing. They're using this. I mean, we said weaponize the dollar. They're trying to weaponize the debt limit too. What happens? No one wins. This is what is wrong with a bipartisan party system. You have two sides who are trying to win one over the other instead of looking together and saying, that comment was complete bullshit. Sorry, but it's true.
What comment?
Sorry about cussing, but
what?
But well, I mean, but instead of saying yes, that we have to, yes, this has to happen short term, but we need a long term solution and process. Let's cut policies on both sides. Let's just make it so the betterment of the country long term is moving forward in the right direction. That's not going to happen. It's a game of chicken.
Populist.
It's a game of chicken. And you know what? The first thing that they should do, Janet Yellen is making $220,000 by the U.S. paid by the U.S. government. She makes over $3.5 million a year from other things, but
why is she still taking that 220?
She doesn't need the 220.
As much as people hated Donald Trump, do you know he gave up his salary as president? Took $1 a year because he didn't need the money.
Any person can go out there, find someone who is going to do the exact same thing she is doing right now. You go around, 99% of the people can go out there and say, we have a debt problem. All right, let's just charge it. Anyone can do that. How is she earning that salary?
She's not.
I mean, her main job is to do that. And she's worth $20 million. By the way, 4.3 million of that is tied up into real estate. So if you're thinking, this economy is not going to be good for real estate, well, obviously the person running the Treasury Department thinks it is a good idea.
Isn't that a conflict of interest?
But I mean, yeah, but
that's a definite conflict of interest. I like what you said there, Ben. And here's the thing: is I do know that part of the Republican Party and part of the Democrat Party, there's a group of populists, and I don't exactly agree on everything, but they maybe need to break off because they are the most popular candidates, and they need to come up with something to break this up. You mentioned that, and I don't want to dive too far into politics here because fuck them.
Yeah.
But you mentioned that the Republicans are just pushing their agenda. They want different things to be funded. Is that what you're saying?
Yeah.
Well,
because look at history,
but I think that there's a part of the Republicans there's a populist movement in that. And I think that they do that small group. There are a lot of old school Republicans who still want their things funded,
right? But
a lot of the new school Republicans aren't necessarily pushing for more funding. They want a balanced budget and they want to decrease the debt. And there's a group of Democrats that are like that too, that I follow and I read. They need to come together and be like, we're not passing shit. This isn't a negotiation. If you think you're crazy and you're going to bring it up to the line, we're crazy enough to bring it over the line. You actually have to be crazy enough to push the button, if that makes sense.
Yeah.
You have to be crazy enough to go just a little bit farther to get change to happen. And I don't think any of them are crazy enough. And put me in Congress. I guarantee I'm crazy enough. But you have to have how many of me's to make that happen?
And then you get into term limits as well,
Right,
because
right.
you're right. I mean, there's separate parts of it, and they're never going to, but neither side is going to win that.
You have to.
Nothing would get passed.
You have to allow
But
default. You have to
you do.
allow the default to make a change. So
You do.
But-
And I mean, that's going, yeah.
yeah, and that causes some pain, but it's going to be very short term, long term prosperity. And if you think from a long term standpoint, that's what's going to be best for the American people, is to get this, either get the budget under control, and if they won't agree, make it default. So, but let's get off of politics. I cussed. I yelled about how hot Janet Yellen was, and she's a freaking beaut, man. But yeah, they're all good looking in the Fed, though. If you look at them,
They are. They are.
I don't know how Jerome Powell is so damn good looking. He's like one of those silver foxes.
There's so much passion on this episode today.
Well, the problem is, man, you're 100% correct. Thank you. It's frustrating. And it's frustrating that a majority of people don't know about the financial literacy portion of it. And I don't expect them to necessarily know everything, because it's not taught in our schools, man. We're screaming about culture war issues as a country. That's a distraction. Like, I hope people understand that. All this stuff you see, like, there's a ton of culture war issues. If you think it's all a distraction, it's being pushed by certain organizations and news organizations who are in cahoots, because there's these big conglomerates, and they need to get this senator on, or they need to get the president on, or they need to get this person talking to them in this Fox News, MSNBC, CNN, all of them, man. It's not just it, but they're pushing these narratives so that we aren't talking about this, which this is an issue.
Right.
Like, this is an important issue. There's a lot, or the border, or the fentanyl problem, or the whether or not opioids was known to kill people and get people addicted. Like, all the shit that's happening in our country that we should be talking about, we aren't talking about it because we want to talk about transgender literature in schools. Like, that's not an important issue compared to all of this, in my opinion. And it's just, and I don't care where you really stand on it.
Right. Comment, leave your opinion. Let's have a discussion on this, because
financial literacy, not transgender in schools.
Right. No, financial. Right. I mean, we're a financial channel, but let's discuss it, because I mean, that we need to come together, have common discussions, look at it. Don't just look at media headlines.
This will affect our kids' futures more than anything else.
100%.
Especially if you're a good parent too. Like, if you're a good parent, whatever ideals you believe in, you will teach to your kids, and your kids will carry those forward. What you can't teach to your kids is how to get the U.S. government out of debt. The only way that this is going to be resolved is if people start having an understanding of it, which is why we bring it here and why we have this podcast. There's a lot of passion behind it, and it's so frustrating for me, because if you look at the literacy in schools and the amount of money going overseas to Ukraine and Russia, war, whatever, and now there's boots on the ground over there, apparently, but only at the consulate. There's a lot of stuff that's going on that they're distracting us from talking about. And I say I'm not saying necessarily government, but the media is not talking about, because it's not getting the clicks. People need to start realizing what's going to affect our grandkids.
Yes.
If we're $50 trillion in debt and I'm 34 years old, my grandkids, when I'm 84, how many trillions of dollars of debt is the country going to be in? And the only way to pay the interest portion of the payments on that debt is to increase gross domestic product. How much can you increase GDP? At some point, it slows down, and it doesn't necessarily go negative. But what if it does? Like, there's been times in history where gross domestic product has fallen. We aren't going to be able to cover the interest payments on our debt. And they want to talk about defaulting. Stop getting into debt. I bet you if we pulled the U.S. budget and saw what it actually was, and we put that out there for people, they would be like, what the hell? And some of the stuff would be like, oh, I want to spend $2,000 a month on restaurants, but you make $3,000 a month, so you're gonna spend $2,000 on restaurant. And it's just an example, but
I feel like we should have like financial literacy in schools a lot soon, where they don't teach it as much. Actually,
they don't teach any of it.
Oh, hardly. Like, there's 11 states out there and it's a state requirement. It's not a national requirement, but there's 11 states out there that do have it. And even then, it's a lot of it's just
electives.
Right. It's just like hey, here's talk about it for a couple of days. It's just in the curriculum.
I think it should be taught. I really do. Like, and
I was going to ask when you think it should be taught. Yeah.
I think so. When I was growing up as a kid, my parents made chores, and we weren't well off by any means. But there would be a dollar amount tied to the chores, and a lot of times it'd be a quarter for this, 50 cents for this, and it would add up to $10 a week typically. So if I did those, I would get paid, and if I didn't get paid. And I also would get in trouble, almost like if you don't do your job, you get fired, right? But if you do your job, you get paid, right? And like it incentivized me to learn that. And then when I got the $10, they always said to me, "What are you going to do with this? Are you going to invest it? How much are you going to invest? How much are you going to save? How much are you going to use, for like personal, like buying video game, whatever it was, right?" And so I would have to figure that out. That was teaching me something. That is financial literacy at an elementary level. You can start teaching these principles from the time a kid is old enough to understand 2 + 2, right? Dave Ramsey has a bunch of kids games that you can play about saving, investing, not getting into debt, so on and so forth. Monopoly is
even so,
game. Yeah, Monopoly is great.
So I remember in my 10th grade math class, we had it was one day. I remember the teacher came up and said,
I don't even remember 10th grade.
I remember this because he said if it was up to me, we would cover things like this way more often, but this is probably the most important thing that you will learn in this school. And it was on calculating interest and how all that applies to everything.
Yes. So that
it wasn't even a budget thing, but it was the only thing that could be tied to financial literacy. Like that was taught in the school. And it was a one-day class in the math class. The teacher even sitting there saying, you probably should learn way more on this than I'm allowed to teach you. That's the problem.
That I'm allowed to teach you is the problem.
Yeah.
And yeah, it is a sad, I'm telling you, math, science, engineering, financial literacy. What else do we need?
I mean, trade specific things, but I mean, that should be options and on that. I mean, so we all, I now kind of want to go back to what we were saying before about how important it is to have these discussions, because you know what you should do on that. You need to subscribe to this channel. You need to leave comments because we all want to have conversations. You might not agree with us. Tell us that. Do your own research. Come back and have other ideas. I'm sure there's things out there that we don't know about. So do your own research, because that is how us as a community is going to grow and learn. And that's what we're building. Yeah, exactly. That's what we're building. We're not sitting here saying, "Oh, you should listen to us," because we're not the government. We're trying to bring you things that you aren't hearing out there, that if you watch the news, if you look at things, you're not necessarily hearing. Now, I mean, a lot of more is more common now with like YouTube and things like that. You're getting some more different sides of it and different takes, which is great. And that's what we're here to provide as well from the financial side. So please follow this channel. Please leave a like, comment, help us grow so that we can get the word out, so that we can build a community to have these discussions to improve as a country. I mean, that's
as a country,
as a community, in a country.
And that's what we're building. And we're big into home ownership. So we do believe in community, right?
Right.
And I believe in lifting up our communities. Even if we have differences with people in our community, we have to lift each other up. Plain and simple. Rising tide lifts all ships. And the reason we are so passionate about this and these conversations and this podcast is because I'm not sitting here telling y'all I know everything. I think I do sometimes, but when somebody presents a new idea to me, and it can change my perspective. And because I know I don't know everything, which is why I enjoy people and listening to people. So we want to lift up the community. Let's lift up our community. Tell people about this community. Mortgage, real estate, world happenings apparently, but it all ties into our economy and housing market and bond prices and interest rates. So Ben, anything else? Because I know Donovan has some stuff for me.
Well, I did want to mention one last topic, kind of segueing into that.
Cool.
So going off of the media headlines and everything, because I've seen around a lot, I mean, especially on YouTube, just like Google searches, 2023 housing crisis. All these collapses. And I mean, we saw this about a year ago and it's coming back in an extraordinary rate. A lot of it's because in March, the nationwide housing values dropped a little under 3%. But you need to look at why that happened, because it's like, oh, doom and gloom. Oh, housing prices are dropping. Interest rates are still up. Like there's no positives to homeownership. That is not true at all. First off, you need to look at where you're living. Because everything is regionally based. If you're saying a global, global number, nationwide number, that's not going to be accurate to where you're at.
But even in the big cities that had the dips, the big cities and, the states that we're seeing a lot of people leave, even the housing markets that had the dip in value, those values have risen 1.8% over the past 30 days. So it's very cyclical. It happens every year. There's not a housing crisis. This is in 2008, and we should cover this topic.
It's a migration change is really there's a lot of things,
a lot of things that go into it. And let's make this a topic for our next episode.
Okay.
I think this will be a very good. I think we have to dive into this more. So this is gonna, guys. If you aren't doing it, subscribe to our station, turn on notifications. We told you a million times, but be sure to watch the next episode because the 2023 crisis that they're talking about never happened, isn't going to happen, and now they're starting to bring it back again to scare people. And I think it's because they don't realize that inflation isn't as bad as they said it was, because there's a lagging number in new leases signed.
Right.
And the new leases signed only went up by 2.6% year over year. Prior to that was almost 15 to 20%, something in that range. So and the Fed's going to do something stupid, and they're going to hike another 25 basis points, 0.25% of that overnight bank rate, Fed funds rate. And what's going to happen is we don't need to do that, and it's going to cause some pain in the markets. And the reason we don't need to do that is because if you pull apart the numbers in the consumer pricing index, inflation's not actually as high as what it is. It's just there's lagging indicators that are going to on May 10th not be lagging anymore.
That's shelter inflation. And if you look at the housing numbers, that has a lot to do with that as well.
Let's dive into that next episode.
We will,
because because that'll be right before that May 10th comes out. So you got it. Was that your last topic?
Other than Donovan, let's hear some comments. And that's
so funny because on TikTok someone said you guys should run for a Senate position to get rid of those loopholes. Don't expect anyone in office to do that. So that's crazy that we kind of talked about that today. And someone kind of
what video was that on?
You were talking about learning the game, and we kind of talked about that today, like knowing the system. So that's kind of crazy. But as far as TikTok, like today, I want to talk about two different comments, and it was about constructive criticism.
I love
your favorite thing. Got two different comments. Someone said if they don't like the delivery, then that means they're getting their feelings hurt over words, pretty much.
Right.
And they need to man up. And then someone else said,
I told that to one of our closing attorneys. I said, man up.
Yeah, he did.
They got that
literally.
And then someone said, some people say that they're direct, but they're just assholes. And there's a way to be direct and kind. So Ben, do you agree? How do you feel about that? Like, do you feel like you can be direct and kind, or do you feel like
you can
have to be direct?
You can, but not everyone's going to take it as kindness.
Genius.
There's two different people in a conversation, right? There's the person speaking, and then there's the person listening. And they're both going to have different. Both have different backgrounds, going to have different takes. And you could be speaking with one person who does take it as kindness because that's how and there's another person who doesn't, and it could just be from a difference of their own opinion. So I feel like I'm kind of avoiding the question, but there's not really a good answer. I mean, what do you?
So I agree with what you said.
Yeah.
Sometimes when you're getting constructive criticism,
right,
it's not kind.
Right.
Constructive criticism is not meant to be kind. It's meant to improve you. Right. And to improve you, I have to tell you the truth.
Right.
And sometimes telling you like, hey, your breath stinks, or get a haircut, or put on deodorant, or show up to work on time, live up to your potential, don't be lazy. Like, those aren't kind words.
Right.
But you're saying it for a kind reason. And if your feelings are getting hurt because I told you you're lazy, or you stink, or your body odor's bad, or that's all stuff that I'm doing to help improve you from a constructive criticism standpoint.
Right.
And I'm not talking to you directly or you, Don.
No,
directly.
you're just saying,
giving examples.
Someone may take it constructively and say, thank you
great.
for letting me know that. Someone may take it as saying, well, that's what I'm saying. It depends on the
person.
person.
So what I think is, if you always want to be kind, you're the asshole. Here's why. If you cannot deliver the tough feedback and you're trying to always be kind, you're hiding what you're really thinking. And if I don't really know who you are, you're an asshole. You're the one who's a jerk. You're the one who's not real with people. You're the one who's not straightforward. You're the one who's not helping improve things. The problem is there's too many people without a backbone who are afraid to look like they are mean or mean-spirited or afraid to give the criticism or afraid to stand up for what they believe in or afraid to help. And I think you're a bad friend too. If you see something that I am doing and you're like, you need to change this because this is, just a little bit of feedback for you. This isn't good. But you don't say it, you're a bad friend. You're not a true friend. I think a true friend is the one who is, hey man, hey dummy, stop doing this. They're not saying it. It might come off as mean, but you're a worse person. You're the jerk if you don't bring that to somebody's attention and try to help them change. Everybody wants to save the world, but you don't want to save your neighbor. You don't want to save your friend. You don't want to save your coworker. You don't want to help somebody improve within their career.
But what I think the comment is kind of getting more at is in terms of the delivery of that. Because yes, I mean, the message being direct, I think they would agree with you of yes. I mean, that's going to be important. That needs to happen. However, you can have positive delivery and what I'm kind of getting at, and you're going to know a lot more about this than I do, because I know you read a lot and you've been reading leadership's books and things like that.
Unfortunately. Yeah, I'm just kidding. It's great to read.
Right. But in terms of people take feedback differently.
Right.
I agree. There was like a comment that I read a while ago, and it was like, worry about being respected, not worry about being liked. Because if you worry about being liked, that's where they manipulate you.
100%.
Yes.
So yeah.
Listen, I ran a trucking company. I can tell you that firsthand. And it's hard running a business. I mean, we've talked about this before when we were talking about not better.com. The guy the board member didn't agree with him.
Loan Depot.
Loan Depot, yeah. It's tough to be at the top. So the board didn't respect the guy who founded Loan Depot,
right,
or else they wouldn't have done what they've done. But like at the end of the day, like I really like Donovan, but I need Donovan to respect me as the business owner because I know what the business needs and I have the long-term vision, right?
Right.
And there's always going to be a learning and a grace period with everybody. New loan officers, Donovan, when we bring more people in for your team, which we've actually talked about.
Yeah.
Me and you working together as business partners. Now, with that being said, I also think that sometimes you can be kind and somebody's not changing, so you need to cuss their ass out. I'm being serious. And then or you need to put your arm around them and tell them how great of a job they're doing because that's how they're going to take the feedback better. Right. Like different people take different feedback differently.
I see it in sports a lot.
Yes.
Coaches.
Coaches know their players. Yeah. But you don't treat every player on the football team the same, right?
You can't. People take things differently.
They take things differently. Same thing in the military, man. Like think about the military. The military is a massive team and they have to do very well together, especially like special forces, like Marine, like all of it, right? What do? Marines go to Parris Island and they get their asses kicked for 6 weeks? I forget how long basic is, but for a long time. And cussed out, have to yell, be up at certain times, lack of sleep, this, that, and the other thing. They're not doing that because they hate you or they're trying to be mean. They're doing that to teach you discipline so that when you learn the discipline, you can survive in times of war.
Right.
Right. So, and Donovan, I actually want to spin this question to you. So I've given you constructive criticism. We've sat at this desk right here, upset with each other before. It was pretty direct, but you also were very direct back. Have things changed?
Absolutely.
And was it bad? Give me your thoughts on like that type of criticism, right? Like that's constructive criticism so that we can grow and get better.
Yeah, I think it's important. I mean, I kind of like when you sit back and reflect on criticism, you realize that people actually want the best for you.
Correct.
And they want you to kind of reach your potential.
Yeah.
I'm not saying it to like waste my breath. You're like saying it to say, you can do this. I know you can do this. This is what we hired you for. So get to it. Maybe I didn't like the words at the time, but it was still necessary because if you were like, okay, it's okay, it's okay. I would never push myself because I wouldn't feel like I needed to.
And I also might not have delivered it.
Right. But sometimes you have to kind of like light a fire under someone's feet.
Right.
To just kind of get them to move.
That's what I'm good at.
So
I'm good at heat making the seat hot. The number one way I push people is I will make their seat very hot, but if I don't make your seat hot, it means I probably don't believe in you. Does that make sense? There's been people who have left this building that never did anything for us. There's one of our first loan officers that we hired. We won't use his name, but you know who I'm talking about, was a college football player.
Yep.
He did nothing. Did I ever make his seat hot?
No.
Because I didn't believe in him. I didn't think he had the work ethic. Then there's been other people where I made the seat hot, their feelings got hurt and they quit, where I wish they wouldn't have had their feelings hurt and quit because I believed in them. And I sometimes wonder what they're doing now because it was a bad decision for them to leave here if this is the type of business they want to be in. Now, I also recognize this. Sometimes I don't communicate what is needed clearly enough for people to understand. So I always go back and reflect on that as a leader. And hopefully everybody here respects me. But if you don't, like, just do your job. You know, I want you to respect me, but I want there to be an understanding of we have a relationship here and we're all on a team and we're all building. And when one member of the team doesn't do what they need to do, it hurts the rest. Like when we weren't, the feedback that you gave us is we weren't making enough content for you to grow the channel. So we've actively worked on making more content and slower than we want because we're busy and stuff. But he has 7 videos up now. We do this podcast weekly. We do, you know, we have those folders now that people, you know, now that we have the equipment that's needed for you to do the personals, that we're going to be able to start doing personal stuff. So there's also, it's feedback's a 2-way street. It's why I yell at you all the time because you don't say anything. You're very quiet. I'm like, just tell me, what do you need from me? No, I don't know how the comment was meant, but I think that if you don't provide the constructive criticism, the feedback, you're a jerk. Or you don't believe in me, or you don't want to make people better. And I think that if we did more constructive criticism and we learned how to communicate with each other and to be able to take it back and still coexist in the same community, because the business is a community, you have a shot at greatness. Nobody builds a massive business or a massive great community or without other people. We need each other. Like, I don't care what anyone says. And, you know, we're doing this with each other, and it's something special, whether it's a business or no matter what it is we're working on. There's no such thing as self-made. So the constructive criticism has to happen in any relationship, whether it's a marriage, a friendship, a business arrangement, an employee-boss relationship, building a business together, which we're at the level of we're building a business together.
Right. Right. And I really like that second comment that you read too about be respected, not necessarily be liked. And that's something that, I mean, I personally have been working on and trying to improve my own like outlook and self. Because I mean, I agree with that 100%. I mean, it goes out there. We've talked before about be a wolf, be a monster. Doesn't mean be a bad person. It means basically have the balls to be able to do the right thing, to be able to actually improve people, work on people. I mean, not just other people, ourselves, because you have to have the ability to do good things to actually do good things.
Right.
If you just sit there and say, oh, I want to be liked.
The balls or ovaries, by the way.
Yes.
Inclusivity.
Right. Right. Yes. No, but
or the non-binary.
But and then I'm also kind of thinking about it, and also kind of plays into it. Really is looking at things. And this is just from my own reflection on myself too. It really is looking at things in short term about, hey, what's going to be the best and nicest thing for now? Because I don't want to hurt their feelings. I'm trying to do something good for them. Okay, maybe it doesn't ruffle feathers now, but is that a long-term thing to do? And we're sitting here talking about like what you need for financing, because you have to have a long-term outlook. You don't need to just extend the debt limit and say, screw the long-term.
Mm-hmm.
You have to be able to look at things and say, what is going to be the best for everyone long-term? Have that outlook. And I think that's where a lot of it comes from, is just that mindset of what can I do, right? Just looking short-term instead of...
said earlier, he said, you got to be crazy.
You do.
Yeah.
Yeah,
like you got to be crazy. Somebody has to do it. Like, you know,
you have to be a heretic is better. Heretic's almost like, which means like disruptor. You have to almost be a heretic. Like, and I have been my whole life. Like my parents would tell me what, like, I really have. Like, I do think that some people are born with being able to disrupt, and like some people make a great number 2, some people make a great number 1 of a department. But you have to have the person at the top that I'm not afraid to be canceled. I'm not afraid to be told I'm wrong. I'm not afraid to be told I'm an idiot, because I have a belief in myself and the vision and the belief in all of y'all to provide those pieces to help us get there. You have to be the heretic, right? And you're talking about the respect piece. Well, the other piece of it is you're talking about long-term vision, right? So a lot of people, the hardest part about being a CEO is I'm making a decision for the betterment of the entire organization. Right. And I have to think about each person individually and also make the decision that's best for the entire organization, because that's going to be most beneficial to each person in here, because this organization needs to stay alive, not just for ourselves, but think about the amount of people that we've heard from, 61,000 videos or views on one video, that are hearing information of ours. The commenters great, but how many people saw it, heard it, and took something from it without us even knowing, right? So this is something that's very important for people. And you have to make that decision. And what I'm getting back to is the long-term decision making and the long-term vision and what I'm seeing in that piece of thing that's in my head about what this is going to become. Sometimes you are crazy for the decision you're having to make that's going to be a 20-year decision, right? You might not see that. You might not see that. This person might not. Like when I said we need to start a podcast, we're a media company first. That sounds kind of freaking crazy for a mortgage company to do.
That would day one.
Day one, I said that before, like long before you were even here. Like when, like we.
I mean, it was day one before we
had licenses.
Right,
we had the podcast. So
the first few episodes, we had to be very careful about what we were saying because we couldn't.
Well, in the first few episodes, we were actually called the High Cotton Podcast. So yes. So the High Cotton, Donovan's laughing. So the High Cotton, which is funny, means you've come into money. Like that's the saying. And it was actually in there's an Amazon show that my wife and I are watching now. It came out in 2014. It's called Bosch. It's about a detective out in Los Angeles and his partner. So Bosch is a white detective, his partner's a black detective. And the whole reason we changed the name of the High Cotton Podcast is we didn't want it to come off as a race thing. And it was a very hot topic at that time. Well, guess what? The detectives are meeting their detective buddies to go do something in one of the scenes. And the black guy turns to the white guy and says, man, new suit, man, High Cotton, meaning you must have come into some money. And so this was the High Cotton Podcast. We switched it to the Lone Guys Podcast, but I will show you the original video clips. That was before we even decided on suits, like suits being part of the business. And the reason is because it's the biggest financial transaction of your life. But we were just like, we don't want to come off as offensive to anybody at all. We're going to speak our minds and you might not like what we speak, but that's why we changed the name, because the whole thing is we're in the Southeast. We wanted to make this was my idea. I wanted to give an ode to the South because it's being here and having more opportunity changed my life from upstate New York. I would not be the same person in upstate New York.
That's when I realized he was more Southern than I was.
How did you not know what High Cotton meant? Though, is the crazy piece. So anyways, we changed it. I talked to a bunch of my friends across all spectrums, Josh Habib being one of them. And they were like, no, don't think it's racist, but if it could come off as racist, just change the name. So that's what we did. We changed the name. And I agree with them, and I appreciate people who gave me the feedback on that. I actually went looking for the opinions because I care, right?
Right.
So anyways, long story short, big vision. So we knew that this was going to be a big part of our business and prior to the business. And to just let people know, Donovan, I want you to know this. Because of this podcast, you know what this brought us?
Tell me.
Multiple loan officers. Another one that I'm interviewing after this. Multiple properties. So I always talk about building wealth through real estate. Multiple properties because of this.
Nice.
So it is worth it. And the vision's starting to kind of bear fruit. As the YouTube channel grows, it's going to bear even more fruits as the Rumble channel grows. And I do think like YouTube, Rumble are the biggest platforms that we need to grow on. And we've talked about this. TikTok I love, but there's a bipartisan push to get rid of TikTok.
Yeah.
So we'll have to log in through a VPN and say we're Germany. Donovan. Yep. So cool, man. Well, I do appreciate everyone for watching the show. I think that's about it. Unless you got another comment that you want us to,
no, we're good.
So I appreciate everybody for watching the show. Donovan, I appreciate you, Ben. Great job at always prepping the show and getting the best reactions out of us. If you tuned in, thank you. But if you didn't tune in, watch us. We're on YouTube. Go find our channel, MBI Financial Group LLC. Bang the red subscribe button. Turn on notifications. Comment in the comment section with your Instagram handle. It can't be just like, hey, great video. Like actually comment about what you saw. Leave your Instagram handle, and you will be entered into an opportunity to win $1,000 either in Bitcoin or cash. It's going to be your choice. I would choose Bitcoin because the American dollar is on some shaky ground. Not really, but thank you again. Go follow us on all our social media. You can find me personally at Mortgage Man Nick, and you are
Big Boss Ben.
And you're going to be looking for that to be popping. Donovan's got all the tools he needs now to make the personal go. So let's go. We're out. Peace.